Welcome to another edition of Coach Castle TV. I'm going to talk with you today about a fantastic website that I've learned about called behaviorgap.com. You see it right here behind me. Can you see that? behaviorgap.com. The author of this website is Carl Richards. I had the privilege of meeting Carl at an investor conference, a kind of a technology kind of conference that I was at last week. And Carl, being the author of the website, wanted to really work very hard to educate investors on their behavior and talk to investors about the things that help them do a better job when they invest. Here's something interesting that Carl learned in his research. Over the last 30 years or so, Carl learned that investment returns averaged about 11%. But investors investing in the market only averaged returns of about 4%. And they left on the table about 7%. The difference between investment return and investor return is what Carl called the behavior gap. And Carl explains on his website that the biggest reason between investment return and investor return is investor behavior. In other words, how we behave when we invest in the market. We have a tendency as investors to want to get into the market when the market's up because we feel better about the market. We have a tendency to want to get out of the market after the market has already gone down, and so we are consistently selling low and buying high. A perfect example of this, I had a client that came into the office several weeks ago, in fact the first week of March. Was very concerned about the market. The market has been down dramatically over the last year and a half, as we all know. And he said, look, Chad, I can't take it. I've got to exit the market here. And so he elected to move his account to cash at the end of the first week of March. Now, here it is several weeks later. The market has done much, much better. It's recovered about 30% or so from the bottom. The investor comes in again and says, Chad, geez, now that the market's doing much better and things have settled down, so to speak, I want to get back in the market. Now this investor, if he would have just stayed disciplined and stayed patient with the market, he would not have left about 30% return on the table. And this is exactly the behavior problem that Carl Richards is talking about on his website. So do yourself a favor, as I did, and go take a look at behaviorgap.com and learn, both of us, how to be better investors. Thanks for watching, and we'll check you again next week.